Hello folks, this is Charlie Harriman from Cloud Financial with a March 2015 Educational Economic Update. In this month's video, we'll talk about some of the major economic events that occurred last month and give you some insight into what they mean for you as an investor. Please stay tuned at the end for a required disclosure statement. The Federal Reserve and interest rates dominated economic headlines last month. To support the economy, the Fed has kept interest rates at historically low levels since 2008. Since bond buying operations ended last October, the next step will be to start slowly raising interest rates to quote-unquote normal levels to prevent inflation from getting out of hand. After the March Open Market Committee, Fed Chair Janet Yellen announced that the Fed is moving away from a patient interest rate policy and will start thinking about raising interest rates this year. Though we don't have a date yet, many analysts think that rate hikes could come as early as mid-June. Though investors are getting nervous about higher interest rates, we know that the Fed will move carefully to avoid damaging the economy. Speaking of the economy, we also got a good look at final fourth quarter GDP reading, which showed that the economy cooled in the last 3 months of 2014, growing just 2.2%. This brings overall 2014 economic growth to 2.4%, up from 2.2% in 2013. Investors care about GDP because it's our most comprehensive economic scorecard and shows us at a glance how the economy is doing. Though the relationship isn't simple, healthy economic growth generally translates into strong corporate profits. All else being equal, strong profits usually boost markets. Digging deeper into the data, we see that strong consumer spending, exports, and business investment supported the economy. The growth rate decreases because of higher imports and lower federal government spending. To translate all of that into you for plain English, the economy was fundamentally on very stable footing at the end of the year. Looking ahead, investors will turn their attention to corporate earnings reports to find out how U.S. companies performed. Right now, overall expectations are lower because of weak overseas demand, low oil prices, and the cold winter. Since leadership teams like to underpromise and overdeliver, we can hope for some positive earnings surprises. We'll know more in a couple weeks. And remember, folks, to speak with your financial advisor to ensure your portfolio isn't overly exposed to interest rate risk, or you might be in for an unexpected surprise once the Fed starts easing their foot off the gas pedal. That's it for the March Educational Economic Update. As always, if you have any questions or concerned about what we discussed, please give our office a call at the number below. Once again, this is Charlie Harriman with Cloud Financial, signing off for the month of March 2015. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 256-715-0094. We'd be happy to talk to you.
While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investment advisory services are offered through Precision Capital Management, an SEC-registered investment advisor. The firm only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability.